This is Inside the Boardroom, and in this episode, we've got a new story for you. It's Southern Energy. This is a natural gas producer that's working in the southeastern Gulf Coast region of the United States. With liquefied natural gas exports, in terms of capacity, more than doubling in recent years, and Southern Energy achieving notable production results over the past few months, we'll explore how the company is positioning itself in this quickly changing energy landscape. Ian Atkinson, who's the president and CEO, is here himself to speak with us. Ian, let's start with this. What expertise in this area, southeastern Gulf Coast area of the States, are you leveraging to build your business around?
Mm-hmm. Well, first of all, Rachel, thanks for having me. It's always a pleasure to introduce our company to a new audience. And it is unique maybe for a Canadian-based team to be working in the southern Gulf Coast area. But as a technical team, we've actually been operating in this area for over 10 years. First of all, as a private company. So what we quickly noticed is there are some real similarities between plays being developed here in the Western Canadian Sedimentary Basin, like the Montney, the Cardium, Duvernay, for example. But the difference here on the Gulf Coast is that the redevelopment through horizontal drilling is far behind what we see here in Alberta, Saskatchewan, BC. It's like going back in time, to be honest. And the reason for this, I think, is because most U.S. upstream companies are still very focused on developing shale plays. Shale plays like the Permian, the Haynesville, the Marcellus, you hear about it in the news all the time. And they're not deploying any significant capital in these older conventional Gulf Coast assets, which is frankly where we see the opportunities for Southern.
Well, over the past few years, we've actually seen LNG export capacity more than double in the U.S. Specifically, major facilities like Plaquemines, Golden Pass, and Corpus Christi have expanded their operations along the coast. What does this increased export capacity mean for smaller producers like Southern Energy?
Yeah, the U.S. has really been focusing on this while, for example, Canada has been sitting on the sidelines. And actually, in the last couple of years, the U.S. has also become the world's largest exporter of LNG, surpassing both Australia and Qatar and their global market share. So as you referenced this significant build out of LNG capacity, I think it'll just further solidify the U.S. as a world leader in this LNG export business. Currently, they're exporting 17 billion cubic feet a day, which is a new record they hit just last week. Export capacity will continue to grow to over 25 billion cubic feet a day in the next 3 years, just by what is currently under construction, coming online, that sort of thing. There is a long line of other expansion projects that will get them to beyond 35 BCF a day, for example, by 2030. And even some of these projects now you're seeing getting to their final investment decision and getting some funding in place. So this has really started this change in supply and demand, a real mismatch, if you look at it that way. And it will affect, I would say, the next 5 to 10 years of NYMEX natural gas pricing, where demand growth will far surpass supply growth. So you have that real imbalance, and that means that prices have to go up. On top of all this, you see it in the news all the time now, these AI data centers, electrification of the vehicles in the U.S., which I think when that plays out really should add to that natural gas demand in the form of electric power generation. So a lot of things going in our way here in the next, immediately to the next 3, 5, and 10-year period.
So these export trends will affect or are already affecting natural gas pricing. Can you talk to us specifically about how that affects your operating areas and what kind of key takeaways, reading between the lines, there are for retail investors that are kind of far removed from this industry itself?
Yeah, it's funny, you always hear in real estate, location, location, location. It's the same thing here. Our assets are less than 100 miles from the core of the Gulf Coast, where the hub of this LNG export business is and the proliferation of these export facilities is taking place. And that's why the price of natural gas we attract will always be heavily influenced by this. Something even more specific to our base assets, which are in the state of Mississippi, we actually get a premium to that NYMEX price to the tune of this year to date here in 2025 has averaged almost 20% on top of what you see on NYMEX. And we see this dynamic continuing into the future in the futures markets as we grow our operations in the area.
Well, at the top, we've said we'll cover your recent production results. Reading between the lines, it looks like Southern Energy achieved more than double the production rates of previous operators in the same lower Selma Chalk formation at Gwinville. What gives you confidence that you can replicate these results in your remaining 2 wells that are currently uncompleted within that same field?
Good question. It's in the previous operators we're following are EOG and Penn Virginia as two of the biggest resource developers in the U.S. So we're really not reinventing the wheel here at Gwinville. We're just picking up where those companies left off with drilling technology of 10 to 15 years ago was the last time someone had drilled a well here until Southern came along. So there's been, as you can imagine, some pretty significant advancements in both horizontal drilling and multi-stage completion technology during this time that simply just had not been applied here. So as Southern comes into this Gwinville field, we have drilled 10 wells to date. We started that program back in late 2022. We paused that program in early 2023 due to commodity pricing being so low. And we've picked that up again here recently with the completion of our 13 to 13 number 2 well, we call it, which is the 8th well we brought on stream in this program. And Gwinville historically has been an asset that's fairly well understood. It's one of the biggest gas fields in Mississippi. Those previous operators I referenced have drilled over 400 vertical wells. They shot a 3D seismic over the entire asset, even had drilled probably 20 to 25 early stage horizontal wells back in 2010. So we're just simply applying technology of today into something that's well-defined, de-risked, and as we talked about previously, right at the premium market.
Well, when it comes to costs, completion costs came 10% under budget, and lower waste production reduced operating costs overall. What kind of economics are you seeing on this well, and does this make you want to drill more wells at Lower Selma Chalk?
Certainly, it does. The key to this is the legacy investment that these previous companies made in infrastructure like roads, pipelines, compressors. It allows us to focus our capital. 90 to 95% of what we spend goes directly into drilling, which equates directly to growing cash flows, reserves, and so you're more efficient with that capital. Very typical of a resource play. The evolution of it is as you spend money and drill wells, you become more capital efficient and production results improve over time. And this 13 to 13 number 2 well is a perfect example of just that. It was the 8th well in our program here that we've completed, and it was by far our most cost efficient and hit the type curves that we wanted in this Lower Selma Chalk formation. And the capital spent on this completion specifically will pay out in less than a year, which is always a good metric. We like to recycle and reuse our own cash flow to further development. We still have the 2 remaining, we call them DUCs, which is an acronym for drilled uncompleted wells. So we have 2 more of those that we're ready to bring on stream here in the second half of the year, mindful of current gas prices. Plus we have at least 120 more locations that left to drill at Gwinville as we look forward to recapitalizing this asset. So it's a very exciting, I would say, inflection point for us.
Well, with an inflection point ahead, I'm also thinking of challenges or risks that you're watching out for. What would you say are the biggest ones that could impact your plans over this time frame?
Yeah, that's also a great question. As a management team and a small cap company like ours, we're always mindful of when we spend our capital. And we always try to time that when gas prices are increasing, so as a way to be most efficient, capital efficient in adding our cash flows. And in the past 3 years, we've seen some pretty significant volatility in the natural gas prices. And so it's made it difficult, frankly, to time those capital expenditures. A couple examples I will bring forward is currently right now, summer 2025, the NYMEX gas price is $3 US per MMBTU. Back in 2022, when we started our drilling program, it was over $10 at a peak. And then as recent as late last year, so late 2024, it was as low as $1.50. So you can imagine we're trying to time something in a volatile market. So that's something we always watch for. Currently, right now, as we look forward into the future of pricing and how we look at capital spending, January 2026, NYMEX pricing is $4.50 US per MMBTU. January 27 is almost reaching $5. So when you compare that to maybe some of our peers in Canada, that we're getting $6.50 Canadian, where AECO pricing in that same time is about $1.50 to $1.60. So certainly pricing is a big, not an obstacle for us, but it is something we're watching. And I do think the next 5 to 10 years will be nothing like the last 5 to 10 years. And there's certainly blue skies ahead for us here in the Gulf Coast.
Well, next quarter or two, what sort of milestone announcements do you have in your pipeline, if any, that you want your investors and existing shareholders to watch out for?
As a small company, public company, we're always looking to engage with our shareholders, and they want to see news flow, which sometimes is tough because we raise money, we try to time the capital spending, as I mentioned. But a couple things for investors to look for from us in the third and fourth quarter would certainly be the timing of these next two ducts to bring on. So those drilled, uncompleted horizontal wells in the Gwinville asset, and also what happens to natural gas prices. So typically here in the summer, I think you'll see in the fall, sometimes you don't have a ton of weekly demand, but at the same time, you're going to see the long-term effects of this added LNG. So I think gas prices heading into fall and winter will be another thing for investors to watch out for. Is I think we are viewed as a pure commodity play company, and then specifically linked to that U.S. Gulf Coast gas.
Mm-hmm. Well, Ian, thank you for being here. We hope to see you again for another conversation.
Yeah, I look forward to re-engaging after we brought on the next well, and hopefully we can meet again then, Rachel. So thank you for your time.
No problem. Ian Atkinson, CEO of Southern Energy. You can find all tickers below if you'd like to learn more. Thanks for watching.